Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indexes. We're looking here at futures, some of the ETFs, and yeah, we're going to take a look at volatility, and I threw in Campbell's soup at the end. So yeah, if you look here, we've got Dow Jones Industrial Average up 73 after that nice close on Friday. The S&P 500 is up as well. You've got the NASDAQ up slightly, and Russell 2000 as well. So, and you can see the Russell's been on a multi-day run. So they're all trying to follow through right now in futures trading, and VIX is dropping lower. So this is the setup that we were looking for. So far things are holding together. If you look here at the S&P 500, this is ticker symbol SPX, and you can see here there was a bullish. First off, you have RSI back above 50. It's at 56, and Fasto's up here at 81. So it's really heating up. And then you have the green line crossing the black line there, plus DI over ADX, and so that's another signal the bulls are starting to heat back up. Also look at the dots here, the green dots flip below the candles, that's PSAR, and so now that's stop and reverse. The candles are now below, signaling possible change in trend. What happened was there was a close above the middle Bollinger Band, that's this dotted purple line here at 2750, and so if that level can hold, then a new uptrend can begin. You know, the S&P 500 started struggling when it closed below the dotted purple line here. That's the middle Bollinger Band. You can see all these candles came down here and they held this gold line and the green line. That's the 50 and 100-day simple moving averages, and now they're working their way back up. If this middle Bollinger Band at 2750 holds, we'll be look for a retrace back up here to the June 12th close, which is right here below 2790, and so that would be the target if support holds. Now if it drops below 2750, that will be a red flag, and that would signal more consolidation. Take a look at the Spider S&P 500, ticker symbol SPY, and it has the exact same setup. You have RSI above 50, Fasto now above 80, bull cross on ADX. You have the PSAR bull flip. You had a bounce down here off of the 100-day simple moving average, the gold line. It held the green line, the 50-day simple moving average, and now it's back above the middle Bollinger Band at 274. Okay, so if it stays above 274, that should signal upside potential, and look for a run up here to about 277.5. That would be the high close here on the 12th of June. That's going to be the target if this level holds. Now, if it gets a close above this high close resistance level, that should signal that SPY wants to break out higher. If it drops down below 274, that will signal more consolidation, and it might drop down to the 50 simple moving average at 271 to test support. Now, one way to play SPY when it's heading higher is ticker symbol SPXL. You know, call options have been heating up here on the bullish move on Friday here, closed up 2.4%, RSI above 50, Fasto needs to get above 80, plus DI and ADX are pinched right now. The green line needs to cross above the black line to signal the bulls are taking control. There was a close above the middle Bollinger Band at 46 here on Friday. It needs to stay above that level. If it dropped down below 46, that would signal more consolidation. You have the PSAR bull flip. SPXL bounced off of the red line. That's the 200-day simple moving average at 4342. It's back above the 200, the 100, the 50, EMAs 4, 8, and 13, and the middle Bollinger Band, which is the 20-day simple moving average. You have the 300-day simple moving average way down here at 40. It's currently above every single moving average. It just has to stay above that middle Bollinger Band. That's currently the top moving average at 46, and that should signal more upside potential. Look for a retrace back up to that June 12th close. It's basically this 48 resistance zone. 48 will be the target and the key level to break. A close above would signal more upside potential. Now take a look at the Dow Jones Industrial Average, ticker symbol INDU or ticker symbol DJIA. You look for this to break above 50 on RSI and Fasto to signal that it's heating up. Right now it's bouncing. Okay, so it came down here and it closed below the 200-day simple moving average on the 25th. That's the red line here. That signaled downside risk. Every single one of these candles here closed either at or below the 200-day simple moving average until Friday. This Friday close above the red line, which is currently at 24364. signals more upside potential. There was also a close above EMA 13 at 24430. That's the orange line there. That's the first close above EMA 13 since back here with the drop below. And so this is all signaling that the chart is heating up. You want to see it stay above that level. If it dropped back below 24430, or definitely if it dropped below 24364, that would signal downside risk. It needs to stay above those levels to keep pushing higher. And then the next target's going to be the 20, 50, and 100-day simple moving averages. They're all converged here. The middle Bollinger Band, the 20-day simple moving average at 24662, it will be the big level to break and turn into support. All right, so keep an eye on the Dow Jones Industrial Average. We're going to see if it can follow through this week. UDOW here is the ticker symbol that should heat up if the Dow heads higher. We are heading into earnings season here, so we'll see if earnings season can save the day after a big pullback. You know, this time heading into earnings season, you know, everything's not cooked in already, and so the pullback could be, you know, turn out to be a blessing, and there could be some nice rallies. Not saying that's going to happen. I mean, everything's hinging right now on the trade wars, but we do have an earnings season, and so this could be a bullish change for the markets. Right now, UDOW is in a downtrend. Okay, so it was testing the middle Bollinger Band here, and then it finally closed below on the 19th of June. And so right now, there was a close back above EMA 13, back above EMA's 4, 8, and 13. That close above 86.50 is signaling more upside potential. If it can come up here and get back up into like 90 or above, you know, above this 89 level, that would signal more upside potential. It has to get above this 50, 100, 200, and middle Bollinger Band resistance levels to head higher. They're all converged here between 88 and basically 90. If they can get above, if the share price can break above that level, that should be the bullish change in trend that you know, traders are looking for. Now, if it did close back below EMA 4 at 8556, that would signal downside risk. It has to stay above that level. Okay, now let's look at the technology sector. That has been the bright spot, and now the triple Q, ticker symbol QQQ, this ticker symbol follows the technology sector, and as you can see here, it's back above the middle Bollinger Band, and so this is the bullish development that everybody has been looking for since support broke back here on the 25th of June, and so this is the best it's looked since this day. It came down here and bounced right off the 50-day simple moving average at 170, and you know, it was at 160 at the time, and now it's worked its way back up. It's above EMA's 4, 8, and 13. It's above the middle Bollinger Band at 174.11. As long as it stays above that level, the next target's going to be this high close up here on the 20th of June. That will be the key level to break. That's also the high close here on the what is that, the 14th of June. That is, you know, there was a double top type of top here at this level just above 177. If it can get a close above, that's going to signal it wants to head higher. Drop back below 174, and that would signal consolidation. All right, let's look at TQQQ. This is a way to play. You know, this is you know, if the QQQ goes up, as you can see here, QQQ went up 1.5%. This goes up 3 times the move of QQQ in either direction, and so, you know, this is the bullish ETF here for the technology sector, and so this made a bullish move as well on Friday, and so the inverse of that is SQQQ, and so yeah, basically this is trying to get a new uptrend going. It filled a gap on Friday. There was a gap between low of day on this candle and high of day on the candle below, and so now that gap is filled, it needs to stay above the top of the gap level. It basically needs to stay above this 60 to 61 level. If it can hold that level, then up here just above 63 of the same thing, the double top level, that if it can get above that, that's going to signal it wants to break out higher. So look for, you know, TQQQ this week to get above 63 to signal it wants to break out. If it comes up there and it hits that 63 zone and stalls out, that would signal a temporary top. It could, you know, just trade in this sideways channel. It has to stay above 60 to be a good play here if you're going to be long. If it dropped back below 60, it would signal more consolidation. Okay, take a look at volatility here. Take a symbol VXX. It did close down 5% on Friday, so it's really cooling down. Now it's below 50 on our side, below 50 on Fasto. You have plus DI is ticking down while minus DI is ticking up, so everything's signaling the chart is cooling down. It pulled back here down to the middle Bollinger Band and closed just below that level. That's at 34.41. It closed at 34.23. If it stays below 34.41 next week, it could get a new downtrend going. It looks like it wants to fill this gap here. There's a gap between high of day on this doji and low of day on the 25th. If it came down to this green line, that would fill the gap. The downside risk is if that middle Bollinger Band turns into resistance, it could come down there and retest the June lows. And so that would be down here at just above 31. So if it does bounce off this middle Bollinger Band, then it could keep this uptrend intact. Now it dropped back below the red and green lines, so it's back below the 200 and 50-day simple moving averages. It has to get back above that 200 SMA at 36.67. If that turns into resistance, it's going to signal more downside risk. Okay, look at UVXY, closed down 7%. So you know, back below 50 on RSI, below 50 on Fasto. You know, you have the downtick and the uptick, you know, signaling that the bulls are cooling down while the bears are heating up. And then you have also the close below the middle Bollinger Band, currently at 11.14. It closed at 10.99. If that $11 level turns into resistance, you could see, first of all, this gap fill. You know, a drop down to this green line would fill the gap. And then the downside risk is it comes down and it retests the lows from June, that June 18th low down here near 950. Okay, so it's going to be real important that it gets back above this green line here. That's the 50-day simple moving average at 12. You can see it drop back below. That's a red flag. And then if it got back, if that middle Bollinger Band turned to resistance, this new uptrend would be broken. It would be very bullish for the stock market, but it would be a red flag for volatility. Now, if it got back above the 50-day simple moving average, then the chart would heat back up again. But if that level turns into resistance, it will signal upside potential for the stock market. Okay, let's look at TVIX. It did close down 10%. This got hit the hardest. It's back below 50 on our side of the volatility instruments. It's back below 50 on Fasto. You can see Fasto's down here at 26, so it's getting near that oversold level. You know, the bulls are cooling down, the bears are heating up. It drops well below the middle Bollinger Band at 46.61. If that level turns into resistance, it could work its way back down to that low close, which is down here below 30. And so it's going to be really important next week for the bulls that it gets back above that 46.61 level. If that turns into resistance, it is going to signal more downside risk. You know, there is the gap between the high of day on this doji and low of day here. You know, it closed right in the middle. It's almost filled the gap. Once again, if that 50-day simple moving average and middle Bollinger Band both turn into resistance, the dotted purple line and the green line here at 52.63, that's going to be a clear signal that people are discounting risk to the market and signaling that there's more upside potential for the stock market, and volatility is getting taken off the table. And so it's very interesting the way this is playing out. So we'll keep following. I'll do follow-ups this week on the charts, and we'll see if that middle Bollinger Band turns into resistance for the different volatility instruments there. Okay, let's look at CPB here for the last ticker symbol in this stock, or in this video, the last stock in this video. This has been an incredible run. It did close up another 1% on Friday. You know, this was alerted down here, you know, when it was bouncing and it got, you know, above EMA 4, EMA 8, you know, that it was heating up. And then I remember we were looking for a possible, you know, top here at the temporary top at the bottom of the gap, but it closed above here on the 13th, and then you know, it keeps working its way higher. So you had a gap here between high of day on this candle and low of day on this candle. The close above signaled more upside. It got above the 50-day simple moving average, the green line, that signaled more upside, but it didn't quite fill the gap. There's still a space here. There was this huge gap up open, and then it's been holding the 100-day simple moving average at 40.44. If it can stay above that level and then close above the high close here on the 25th, then this 200-day simple moving average at 43.43 will be the next target. And so, yeah, if you can get through this resistance zone and it keeps holding EMA 4 and staying above the 100-day simple moving average, it should work its way back up there to that 43.50 level. Yeah, this has been a really nice move for the stock. Yeah, it's been on a great run. If it fails to break that 200-day simple moving average resistance level, that could be the temporary top that cools the run down. So keep an eye on it. There's giant volume here on the 25th. It held support, and it wants to, you know, potentially break out higher. If it stalls out here and closes below EMA 4, and definitely if it dropped back below the 100-day simple moving average, it could consolidate. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the video. Thank you.